Hey y'all, Scott Martin here. Last few days of tax season. Thought I'd come up with some few tips for you on working with a crypto tax accountant. There's two times that you need to consult with a tax accountant. One is before you make a trade or a large substantial trade. And the second one is when you're prepping your books, obviously. The reason you want to talk to a tax accountant before a trade is because timing ends up being an important element of all this. What the IRS does is they look at things on a yearly basis. So if we're getting near the big ending of a year, we have control over which year we're going to actually have a reportable event in. Number two, we want to take into consideration any net loss carryovers from previous years. This is really, really important because this is going to give you a lower anxiety threshold, especially if you have a lot of NOL carryovers from previous loss years, which a lot of people have right now because of the 2022 and 2023 bear markets. Also, if you have got a digital property that has gone down to a fraction of what its value, it's basically worth pennies on the dollar, and we know that it's going to be a substantial loss, consider the possibility of abandonment because there may be some additional tax benefits. Remember also that you can apply your crypto losses against gains from sales of other property. So if you're considering selling your house at a substantial gain, realize that you can take your crypto losses and apply it towards those gains. Okay, preparing your crypto ledgers. Really important. Be very careful when you're working with a crypto aggregator tool like ZenLedger or CoinLedger or anything like that. They're amazing tools and they can supply you with a lot of really great intel. Just realize that your input in there is going to be really important. You can't just import all your data or API it into that aggregator tool and have it calculate everything automatically. Remember that there are 4 levels of reportable transactions. One is obviously your trading gains and losses. That's a tax reportable event. Passive income, staking rewards, interest, affiliate rewards, things like that. Active income, let's say you do a service for somebody and they pay you with digital properties, coin, crypto. That's a reportable event. And then, of course, if you own a business, if you pay for something in crypto, then obviously we want to take that into consideration also. Now, if your tax person is inexperienced with crypto, here's some of the things that you're going to need to look out for. You'll need to supply them with the correct crypto ledger, which can be done through an aggregator tool, Coinbase, ZenLedger, what we just talked about. They're going to want to see the following documents in 8949, which basically just is your exchange reporting on gains and losses, and then a 1099, and that's going to report any passive and sometimes active income. There's a new box at the top of the 1040 form that asks you to check it if you have any crypto, if you invest in crypto. That is only required to be checked if you have a taxable reportable event. If you're just holding on to crypto, let's say you purchased crypto, but you didn't dispose of any, you didn't have any passive income or anything like that, you're not required to check that. Check with your tax person, make sure that they're comfortable with crypto. If they're not, give me a call or connect with a crypto tax professional that knows what they're doing, especially if you get up into the larger amounts and you have a lot of transactions going on, a lot of wallets, exchanges, you're trading on a lot of different symbols. Definitely look for a crypto professional.